But if it does break down below this 18.2 area and keeps going, I anticipated visiting the 17.8 area. So again, keep an eye on 18.2, keep an eye on 17.8. So that was last week's price action overview for the NASDAQ. And if the two people that watched the video, I gotta say, if you guys played this, you would have made some money. Especially on Wednesday, where the prediction really played itself out. We visited 18.5, popped up, and dumped straight down all the way to 1800, which was a nice opportunity for you to get in there. You could have gotten in anywhere along the way and made a nice amount of money. I made actually probably, I think, about 7% of my account that day because I was so convinced that this 18.5 couldn't stand. And it didn't stand. It dropped. And it dropped exactly in the manner that I predicted. Now we're sitting at 1800. My prediction last week was that all this was going to happen within the same week. I expected the price to get all the way down to 17.8 and not 1800. So the first leg of what I predicted happened. The second leg is what I'm pointing out here. So even though my calculations were accurate, I was way ahead of time thinking that this would happen quicker. So now with the FOMC coming this week, I predict that price will pop back up to these 18.2s before coming back down into the 17.8 area and maybe even further, depending on how the Fed reacts to the recent inflation data from PPI and CPI, which wasn't good last week. It indicates that inflation is on the rise. Price of goods and services are still not coming down enough for the Fed to really justify a cut. Now, the market predicted a cut in March, was wrong about it, and the stock market went up anyway. Now they're predicting cut in June. Will they be wrong about it? And will the stock market go up anyway? That's yet to see. We'll see what happens. But my feeling is that it's starting to be real. The economic numbers that matter are not coming in favor of a cut. And if the Fed does go ahead and make a cut in June, the possibility that inflation will continue to rise and make that cut look like a really stupid move, I don't think they want to risk that. But again, we're in an election year, so they don't want to see the market tank because Democrats will blame them. It's we're still at a sticking point. But regardless, I do see price following out the price action that I stated last week. I do see us visiting 17.8. Even if the Fed comes out and the meeting goes haywire, I see us going down to 17.8, visiting all those stops down here. You see down here all these even level stops. That's why I think it's heading to 17.8. You're not going to get in a car, drive, 400 miles and your destination is 500 miles away and you stop and return. You're going to get to your destination at least. You did 80% of the trip. So I feel like the 17.8 will be touched. If the Fed does put out some positive messaging, then we might just touch and bounce from there. But if the Fed is negative, I don't think 17.8 is holding. I think we're going down to explore some prices lower. And when that happens, that's when I officially turn my bearish cap on and I start looking for way more opportunities to the downside than upside because that 17.8 going down, if it breaks, then it can really, travel. All right, let's head over to the economic calendar here. I'm using investing.com. And Monday and Tuesday, we don't really have any high level news that would really affect the entire market. So I would anticipate some sort of choppiness. There is a possibility that the markets could run up and run down and fake people out in either direction in anticipation for the real move, which I see being Wednesday, which everyone knows is going to be Wednesday because this is when the Fed meets. Wednesday afternoon, the Fed rate decision. And if that, this number right here used to actually be a cut. People were anticipating a cut, but now there is no cut being anticipated. People are just assuming that the Fed will lay flat and not make any cuts yet, and they're pushing it out into June. Now, if the Fed indicates that there will be no cuts in June, there's a possibility that the market will really start to tank on that news because people are assuming that June the cut is going to come. Unfortunately, the economic numbers that we received last week, the inflation numbers were not very favorable to a cut. So the Fed has their backs to the wall. They cannot really, I think, signal that there will be a cut in June until the numbers sort of favor them. but it could be seen as being irresponsible because inflation has a tendency to return after lulling a little bit, and we've had a drop in inflation, but now we're seeing some sort of return. So is this just a blip in the system, or is this a sign that inflation is back and it's still on the rise? So again, Wednesday's the day to look out for. So as far as my charting concerned, I see Monday, running up to this 18.2 area, visiting it, dancing around, getting people to, take their longs or shorts from that area. And then I see it dumping back down during the FOMC on Wednesday to 17.8 and maybe even lower. Now, this decision is really where everything stands. I'm not going to be sort of playing into it. Play I'm going to play a little bit on Monday and Tuesday and maybe Wednesday morning, but when the Fed decision comes out, I'm hands off until afterwards, and I can get a clear direction on what the market wants to do, which may be to the downside, guys. So again, I'm keeping an eye on that 17.8. I'm keeping an eye on 18.2 again. I expect a pop up to 18.2, very similar to last week. I don't expect it to stay at that 18.2 very long, maybe get to 18.3, but again, a pop down right afterwards. If it manages to stay up to 18.3 and keep moving up, then I'm wrong. We move forward again. But I do see us visiting 17.8 and maybe lower this week after the FOMC announcement. And then on Thursday is very interesting because we have initial jobless claims, which is again an inflation reading, because it tells you how much money people will have to be able to buy products, and therefore prices will keep going up if people keep buying products. So the Fed wants to see less people with jobs. Now, so 8:30 Thursday morning, this number will and should move the markets. Because there will be some sort of price action around inflation numbers after whatever happens with the Fed. And looking down, we have global services PMI, global composite PMI, and these numbers, I'm not sure exactly how they'll affect the market. I'm not 100%, but we'll see. Existing home sales, again, this will relate to inflation and seeing how many people are currently buying homes. And then on Friday, Fed speaks at 9 a.m. I'm sure that's going to shake up the markets. Fed bar speaks at noon. We have those two things happening Friday morning. So yeah, Friday I see a continuation of whatever's happening on Thursday and Wednesday. So Wednesday is really going to set the tone for the week and determine what's going to happen. I see downside. I don't see much upside from here. I think we visited the upside and it's now time for a little retracement. The market is definitely against me. We're in a huge uptrend for the past 2 years practically, but it looks like this may be time for a slight retracement and maybe a big retracement, but we're yet to see. But right now, I'm very confident about 17.8 being visited and maybe even going lower this week. And 18.2 area, 18.3, that's where I'm trying to get short. Again, watch the market, see it chop around, set a sight top, set a tight stop word relative to your take profit and enjoy. But yeah, guys, this was fun. We're going to keep doing this every week. It helps me set the market straight and have an overview for what I want to do. And so far, so good. This week was a nice week. Like I said, I made about 8% on the account this week, which feels very excellent. And again, put in the work and you see the results. Peace.